The profit you make from the auction is taxed at the lower than income tax rate, the capital gains rate. You're now listening to the Contemporary Equity Podcast with your host, Garen. On this episode, I'm going to show you how you can potentially minimize your tax burden with artwork. In 2018, there were $67.4 billion in global art sales. Most of the money was spent by ultra high net worth individuals who buy art in the primary market directly from the artist or through the galleries, or from the secondary market, the auction houses that facilitate the resale of art. Let's go through a couple tax deduction examples. Example 1. You're an affluent collector from Atlanta. You buy a painting from a gallery for $10,000. You take the sales hit of roughly $700 and hang it in your home. You enjoy it for many years while the value of the painting steadily climbs, partly to your good eye for art and partly due to the support of the artist's gallery, which works hard to get the artist's work into museums and also increasing prices through sales and strategic auctions. All the while, the museum you support is courting you. Oh yes. They would like to take the painting off your hands, add it to their collection, and reach a wider audience. Since you've owned the painting for more than a year, you can donate the painting to the museum and claim a charitable tax deduction equal to the work's current fair market value. You hire a qualified independent appraiser who researches sales records and provides you with certified documents that say your painting is now worth $50,000. You get advice from your CPA, and they tell you that if you give the painting to the museum, you can deduct its appraised value from your taxable income as long as the deduction is less than 30% of your adjusted gross income, or AGI. So let's break that down. If you make $600,000 a year and you donate the painting, your taxable income goes down to $550,000. You've effectively reduced your taxable income $50,000 with an initial $10,000 investment. But say you make $120,000 a year, you can only take 30% of your AGI, which is $36,000. But no fear, you can spread the remaining $14,000 tax deduction over 5 years. Either way, you saved a significant amount of taxes, and the museum is able to share a new piece of art with the community, since art prices are so high now that museums can't even afford to buy art directly anymore. Example 2. You're an affluent person in Atlanta who doesn't appreciate art but realize the investment potential. You buy the painting for $10,000, you don't hang it in your home, and you ship it to a Freeport, which is a warehouse in tax-free zones. As long as the art is there, you pay no tax. The art stays there while the value increases for the same reasons we mentioned before. If you loan it to museums, it bolsters the exhibition history and may increase the value. After 10 years, you get it appraised and learn of its $50,000 valuation. You try to sell it through the same gallery you bought it from, and they broker a deal with a client who uses the same Freeport you do. The art changes hands theoretically, but never actually moves out of the Freeport. Nobody pays sales tax. You've made a profit, and it's taxed at capital gains, which is lower than the income tax rate. Or you may decide to take the painting to auction. Take the sales tax hit and pay the fees to the auction house. Then it'll go up for sale at the appraised value. Look, auctions aren't regulated, and maybe other collectors of that artist's work bid the price up, or galleries buy works through proxies to maintain the value of other works they sell. We can't be certain, but the results are reflected in the future appraised values, which are used to determine the collector's tax deductions. Again, the profit you make from the auction is taxed at the lower than income tax rate, the capital gains rate. Collectors in both of these examples are taking risks, and there is no guarantee the art you buy will increase in value, or you'll even find a buyer when you're ready to sell. However, the number of affluent people in Atlanta is rising, and an increasing number are strategizing to save money in taxes through the use of artwork. This has been another episode of the Contemporary Equity Podcast with your host, Garen.